Good morning and welcome to the market forecast. Today is Tuesday, June the 15th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're looking for accurate context, good risk management, and patience in the markets. And it's going to take some patience in the markets today, I think. The economic numbers that are already out and due out today, as well as everything else that's on traders' minds, are going to be substantial today. Just make sure that you're trading what you see. The equities are showing drastically different ideas. We've got the S&P and the Nasdaq, putting in contract highs. And they're set to open mixed. We've got the Dow and the Russell showing a different picture. So make sure that you are getting your information from the market that you're trading. I think it's going to be important to do that today. We got a couple of interesting things in the Nasdaq and the E-mini S&P chart to show you. A pretty decent reaction from a overnight inventory in situation in gold yesterday. We're going to see that as well. So just kind of going over this morning, the FOMC meeting begins. PPI already out, retail sales, and Empire State Manufacturing Index. The PPI numbers indicating, as everybody's expecting, some inflation, of course, creeping in. Retail sales a little lower than expected, as well as the Empire State Manufacturing Index. It's 8:15 this morning. We're waiting for industrial productions, business inventories. Housing market index are at 9 o'clock Central Time. Business inventories and housing market index also, I should say, is at 9 o'clock this morning. 8:15 is industrial production and capacity utilization. So lots of numbers due today, due tomorrow, and Thursday. Quadruple witching on Wednesday. Other things on the minds of traders this morning, the G7 conference, perhaps some trade agreements between the U.S. and the European Union regarding jets, airplanes. Stocks are set to open mostly mixed, higher, some lower, mixed, I would say. Bitcoin is back up above $40 or $40,000, I should say, as Elon Musk has said that he is considering taking Bitcoin for Tesla again. He kind of nixed the idea because of the economic impact of mining for Bitcoin, but apparently he's perhaps waffling on that and changing his mind. Biden and Putin to meet tomorrow. Much anticipated event for tomorrow. We've got to be patient. We don't know how this is going to play out and if it's going to play out at all in the markets. Who knows? We also have crude prices remaining strong. I guess there's maybe some speculation about the 2015 nuclear deal. Is it we're going to re-enter it? Are we not going to re-enter it? If we do re-enter it, it's going to allow another 2 million barrels per day of crude oil into the world market. So with crude moving the direction it's headed, it kind of tells me that there's maybe a little bit of doubt that we're actually going to do that. I don't know. Hey, nobody knows for sure, but it seems as though the current administration is interested in doing just that. So we're going to have to play it out. We're going to have to see what happens. As always, I like to say good morning to everybody. And here we go. Good morning, Theo. Good morning, Tone, Brian, Bill Phillips. Good morning to everybody. Ed Nelson, Taurus Trader. Good morning, my brother Rick. Good morning, Caesar, Vince. Good morning. Level 2. Very interesting week ahead of us. Absolutely. James, good morning, my brother Rick, saying, "Hey, fasten your seatbelts." Absolutely. Da H. Good morning. Murph, every day another blessing. Absolutely. Zurain Vici. Tim, Greg, Mr. Chine's Mystery Channel, good morning. Brad Generous, good to see you. Joe West, Andres, Mike, the chef Magallanes is in the room. Federico, Laura Ritchie, Colin KM, Jerry is awake, and I hope John is too. And good morning, Keith. Smarty Trader Pro, Jason Cargill, Buenos Tuesday. I see maybe a couple of new names there. Glad to have you with us here for the market forecast. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Murph, an issue for a long time, TradeStation. What's going on? Oh, having issues with TradeStation orders. Second time now, not letting me exit my orders. Took a big loss because of that. Anyone having that issue? Let our excellent trader support line help you with that. Good morning, Ryan. Conduit. Good morning, Fanny. Hey, Fanny, how are you? It's good to see you. Deanna. If this is your first trip to the forecast or just saying hi, I appreciate you being here. I appreciate you saying hello, letting me know you're here. And we're going to jump into the charts very shortly here. As always, checking the VIX is up 1% today, nothing too impressive at 1659. The dollar index holding 90.64, holding above that 90 level, and the 10-year yield has a little bit of an uptick this morning, back up above 1.5%. So trade what you see today. It's important to really try and not chase trades, not chase the market. The market is going to give you opportunities, hopefully in a cheap way, get into trades where you're looking for small risk and bigger rewards. To me, that's always been my edge. Is I'm not taking trades looking for a one-to-one reward over risk or even less than that. I'm looking for trades that I can kind of expect a 2-to-1 reward over risk or more if it goes my way. And so just keep your eyes peeled. Let the market tell you when it's time to react. You hopefully feel it down here deep in your chest, and then think about it and then react. All right, let's jump into the charts now. As always, starting with the daily in crude. Let's take a look. JB, glad to be here. Thanks for letting me know, and anything I can do to help. Angelina Oleg, good to see you. All right, so here is our daily in crude. Obviously, we were going from bottom left to top right. We had an opportunity yesterday to break out and hold above the weekly kickoff high, which was 71.20. We are seeing a significant move up above that and another touch point of the trend line that goes way back. All right, so this market does roll on Thursday. There is a tendency for directional markets to fall range bound in the week of rollover. Doesn't seem to be bothering the crude oil this morning. We lost 22,000 in open interest yesterday as we come into rollover. That is probably more rollover related than directional. Was that a bit of a short squeeze yesterday? Perhaps. Was it rollover related? Is there going to be some sort of headline risk or headline news about the Iranian nuclear deal? This trend line is at our high for the session so far, and it is our next hurdle to the upside. So with all this kind of hanging out and questions and everything, it's going to be trade what we see. Let's take a look at the 30-minute chart here. Okay. Settlement was all the way down here. We broke out. We could not hold above that weekly kickoff level / last week's high. We closed back down below it. Settlement 70.88. Put that on your charts. We see that the market has been moving steadily higher and increasing in momentum as we get closer to the U.S. trading open. So we can expect to have some overnight longs, some weaker hands overnight longs in this market. You're going to see in the gold how that gave us a really good opportunity in regular trading hours yesterday. Are we going to see that opportunity in crude today? Are we going to pull back? Are we going to come back down to this important inflection level that it seems to be a little bit magnetic than directional, which would make sense for a rollover? Are we going to come back to this level? Are we going to come back and recheck settlement as the markets so often do? The market's just opening. Can't see if the opening range is neither the high nor the low. If that is the case, that can give you some early indication as to buyer or seller control early in the market. So be patient. The market is, in large part opening in value and in range. If we reject this range, we may continue to move higher. If we reject this area up here, our overnight high, and we start spending some time in value from yesterday, then I'll look for the market to kind of take out some of the overnight longs and bring us back to more reasonable levels for longs if we are looking to buy weakness in this market. I feel like if we buy it here, we've got a lot of risk. If we sell it here, maybe not so much risk, and we have the opportunity to kind of watch the price come back down to settlement. If we can't re-accept it, and if we can't, kind of accept in value from yesterday, then we may continue higher. Good morning, Yolanda. Thanks for saying hello. Okay, E-mini S&Ps. We got an interesting situation here this morning. So yesterday we took out the contract high, not necessarily the all-time high, the contract high for the September contract. We accepted above last week's high. We added 165,000 in open interest. Oh my God, everybody's buying. No, that's probably more rollover related as a motivation to get your contracts moved over. We lost a lot in the December contract. We added a whole bunch in the September in the June contract. We added a whole bunch in the September contract. It's just part of the function of rollover. When we expire, you'll probably see about 500,000 contracts expire and settle in cash. Okay, so the 30-minute chart, let's take a quick look. This is a situation that we do see quite often. Yesterday, we opened and we really kind of broke off the last week's high. We kind of rotated through the better part of the day, and late in the day we ended up with what we call a late spike. This late spike tells us, hey, something happened yesterday that changed the situation. The base of the late spike is going to be right around here, about 42.38. When the market opens the following day inside or above a late spike, it's an indication of acceptance of higher pricing. It doesn't mean that we can just buy it here. If the market opens and leaves that opening range, that first minute of trade at the low of the session, I think it's a good opportunity for us to see this market move higher. But the spike special situation play can come back all the way to the base of the spike, which is again down here at 42.38, as a support level before continuing to the upside. Now, there's no guarantees of any of these special situations playing out on any given time. It's just a probability. The fact that we've opening or will be opening in the late spike or above is a higher probability move to the upside. Look for opportunities to buy weakness in that case. The NASDAQ is in a similar situation. The Dow and the Russell, however, are not. Here's the NASDAQ. Added 20,000 in open interest yesterday. Again, perhaps rollover related. Nice to see it finally take out the contract high yesterday in the regular trading hour session. We have another contract high in the overnight session, similar to what we have in the S&Ps. Open interest, again, rollover related. So we see that the market is continuing higher in a short time frame as well as the longest time frame. Taking a look at the 30-minute chart, we have another situation with the late spike. Here is settlement all the way at the high here, that nice pop at the end of the day, almost doubling the range. NASDAQ had a completely different day yesterday than the S&Ps. It looked lower, but it ground higher for the rest of the session and then put in this late spike. The late spike is probably where we are going to open, and the base of the late spike is going to be right around here, around 14,067-ish. Everything is a zone in trading. There's no finite numbers or levels that are precise. So we're going to look at, I don't know, somewhere between 68, 67, 66 in this area for the base of this late spike. The S&Ps are threatening to gap above the range and continue. The Nasdaq is telling a different story. The Nasdaq is coming back inside the spike, which makes the late spike, the base of the late spike, a support level. Again, nothing is for sure. It's just probabilities. The market is telling us where it's going to go. It's up to us to be able to see the signs. The late spike play, opening in or above a late spike, is an indication of a higher probability of acceptance of higher pricing. Now, we'll look to act accordingly. Going to try and stay patient. Opening range trades may be prevalent today in our equities. All right, gold. Okay. We had a pretty good stab down below weekly kickoff low yesterday that was pretty swiftly rejected. We lost 8,200 in open interest, and this is kind of hard to read. It is a significant change in open interest, but it's difficult to know whether we liquidated some longs down below there. Maybe we got a little too long and we got out of those, or if we covered some shorts on the way back up. It's difficult to be able to tell the difference in this case. We had a breakout of this trend line. We are still inside the extended trading hour session from yesterday. We have our overnight high in gold lining up very nicely with the low of last week. So there's some visuals here for us to look at. What I really want to show you is the opportunity we had yesterday. This circle shows Friday's close. This shows overnight inventory just ripping it to the downside. There's a big accumulation of shorter hands traders in the overnight session getting shorter and shorter. When the market opened, it left the opening range at the low of the session. It did not, however, hold it. It went below it. There was no real participation, or sellers backed off. Buyers came in, scared most of the overnight shorts into a substantial drive to the upside. Now, where did it trade to? It traded to last week's low and never did fill the gap. Now, there's information in the fact that the market did not fill the gap on the overnight inventory adjustment, didn't get back to settlement. Now, look where we are. We are at settlement right here in gold, settlement 1865.90 from yesterday. We have not left the value area from yesterday. We probably expended a lot of energy, and we're just going to probably hang around here a little bit today and see what happens in the world. I'm not looking for anything substantial in gold today until there's a change in the current short time frame market state. Maybe it's going to be the weekly kickoff low that's going to create an opportunity. Maybe it's going to be last week's low that's going to create an opportunity. Is it value low, value high? Is that where our opportunities might be today? Not seeing anything tremendous here. There's no overnight inventory. I'm going to be patient and wait for something to change. I mean, that's really what we are here to do, is to recognize change and to take advantage of it. We have the opportunity to profit, not necessarily the right. The euro. We added 4,000 in open interest off the low from last week. Not really finding anything directional here. It's still finishing up rollover. Supported last week's low yesterday, again last night. Not really seeing anything tremendous here. Take a look at the 30-minute chart. Okay. Excuse me, I apologize. So we did open with a gap. We've closed the gap. Are we in an area where we may just find some sort of repair? I mean, here's the 730 bar. We traded to within a tick of The naked point of control from Friday. Where's the market headed now? Naked point of control from yesterday. This is repair. This is repair. When we open between two naked points of control in consecutive days, we tend to trade to both of them. This is repair. It's going to put us back into range and value from yesterday, where I'm going to probably have to chill. Not really looking for anything tremendous here. Where are we? We're right back in value. No real change to the perception of value of the euro. I'm going to chill on that one for a little bit. It's not back burner, because I believe there's something there, but nothing tremendously urgent for us this morning. And here's the 10-year. This was weekly kickoff low. This is weekly kickoff high. Last week's high, obviously, weekly kickoff high, but I was looking for this market to be able to maintain price above weekly kickoff low. It did not yesterday. Now that level of assumed support now seems to be becoming resistance. Get a little bit of an uptick in the yield today, so pricing is a little bit lower today. I think this weekly kickoff low is pivotal for this week. If we never even see it again, that's the breaks. 30-minute chart. So weekly kickoff low was looking for the market to maintain above that level. It did not. It's now become resistance. Here's our overnight inventory, which there is none of. Settlement is 132.16 and a half ticks. We've looked at weekly kickoff high, which is relatively close to value high from yesterday, within a tick. We've looked a little bit lower. We seem to be rejecting that. The market seems very comfortable currently trading settlement. Stay patient. Look for opportunities at the extremes in this. The extremes for the current extended trading hour session. We see that the market looked below the range from yesterday. Is there an opportunity in that? If the market continues to rotate higher, what about this level here that was resistant last night, this important weekly kickoff level? Are our opportunities there? Well, it's the high of the session. This is the low of the session. This is where I'm talking about being patient and waiting for the market to offer change. What maybe this move to the downside is going to hold as the low for a while. That's change. It moved lower, now it's heading higher. There's change there. We get the opportunity up here. If we reject up here, that's change. The market's moving higher, it's changed now moving lower. If we extend above weekly kickoff high and build some volume, then something also has changed, because what it was resistant, now it is now no longer presenting as resistance. So look for change at the extremes in the Treasury today, as always. Always thinking about the extremes and thinking about the levels that not a lot of people have traded at and not a lot of people have had the opportunity to trade at. Those are the ones that I'm looking for, the areas where the market leaves excess. If I'm good and I'm right, I'm usually going to be very close to one of the extremes of the range for the day on at least one of my executions. So look for those smaller risk, bigger opportunities at those extremes. Rob T, Frederico, Troy, good to see you. Dr. VJ, good morning. All right. We got Coach's Playbook today. We're going to be talking about, I think we're talking about the FOMC meeting tomorrow, and some ideas on participating or not participating as the information comes out. Lots yet to come out today. Let's keep it clean. Look for good risk management as always, and I'm going to take my deep breath and get down to business. Stay humble, grateful, and creative today. We'll see you at Coach's Playbook, and we should see Dan for the market recap again today. And I'll look forward to seeing you at both. And tomorrow is Wednesday. Let me put this in. The group coaching starting at 1:05 tomorrow because of the Fed meeting. And I'll look forward to seeing you there. Have a great trading day. Trade well, and be good to yourself. Be good to each other. We'll see you later. Trade well.